Hey everyone, welcome back to Corporate Decoder, the place where we try to understand what companies are really saying when they talk to the world in corporate speak. And today we have a very interesting filing from Strata Skin Sciences, Incorporated, a company focused on skin health. And if you're interested in how companies use financial tools to fund their growth and what it means for them, then you're in the right place. Before we dive in, if you find value in these straight to the point financial breakdowns, make sure to subscribe and ring that notification bell. Also, we have a fantastic Discord community where we break down these kinds of documents. You can find the link in the description below. So what exactly is this document, folks? Well, it is a Form 8K, a current report. Companies file these when they have something significant to announce. And in this case, Strata Skin Sciences Incorporated is letting us know about their ongoing efforts to raise capital. They are essentially updating us on how they plan to sell more of their company stock to investors. The company Strata Skin Sciences Incorporated is informing us about an equity distribution agreement they have in place. Think of it like a deal to sell shares of their company stock. They initially set this up back in October of 2021, and it allows for them to issue and sell shares worth up to $11 million using something called at-the-market offerings. This means they can sell their stock on the public market over time. Now, to be able to sell these shares legally, they need a registration statement. They first filed one a while back, but it has been replaced by a new one. This new registration statement was initially filed in November of 2024 and became effective in December of 2024. This is the legal framework that allows them to sell their stock. They have now filed a prospectus supplement to this registration statement dated the 26th of September 2025. This prospectus supplement details how they plan to offer and sell shares in the future. Essentially, they are getting their paperwork in order to keep selling their stock. As part of this filing, they are also including some legal opinions from their lawyers, Stephen Sibley. These opinions are about the legality of the shares they are issuing and are incorporated by reference into the report. This is standard practice to show that their legal ducks are in a row. It is important to understand that this report itself is not an offer to sell their shares. It is simply a disclosure of an event or development. Under the section for exhibits, we see the legal opinion again as Exhibit 5.1 and a consent from the same law firm as Exhibit 23.1. There also is a reference to an interactive data file related to the cover page, which is pretty standard for these electronic filings. Finally, we have the signatures section. This is where the company officially signs off on the report. In this case, it is signed by John Gillings, the Chief Accounting Officer of Strata Skin Sciences Incorporated. This confirms that the company is responsible for the information presented. The date on this signature is the 16th of October 2025. Now let's think about what this all means. Strata Skin Sciences Incorporated has an ongoing arrangement to sell its stock. They have updated their registration to continue doing so. From a business perspective, this generally signals that the company needs or wants to raise funds. This could be for various reasons like funding new product development, expanding their operations, or perhaps managing existing debts. The fact that they are continuing to use at-the-market offerings suggests a flexible way for them to access capital as needed. From an investor's standpoint, this means that more shares of Strata Skin Sciences Incorporated could be entering the market. This could potentially dilute the ownership stake of existing shareholders. However, it also indicates the company's confidence in its ability to sell its stock and raise funds for its future growth or operational needs. It is always wise for investors to look at the company's overall financial health beyond just these funding activities. We have not seen specific financial tables in this particular filing focused on revenue or profit, but this report is about the mechanism for raising money, not the results of its use. The core story here is about capital formation. The company is proactively managing its access to funds through a pre-established framework. This is a common strategy for companies, especially those looking to grow rapidly or navigate uncertain market conditions. The key takeaway is that this filing is about the ongoing process of funding and not about specific performance metrics like sales or profits. Analyzing this filing requires us to look at the broader context. Strata Skin Sciences operates in the aesthetic and medical device market for skin treatments. Companies in this sector often rely on capital for research and development, as well as marketing to get their products in front of consumers and medical professionals. The decision to continue offering shares suggests they see opportunities that require financial backing. In my opinion, Strata Skin Sciences Incorporated is using a standard and flexible method to secure capital. This is not inherently good or bad, but it is a strategic decision. The strength of this strategy depends entirely on what the company does with the money it raises. If they invest wisely in revenue-generating assets or innovative products, it could be very beneficial. If the funds are used to cover operating losses or are not deployed effectively, then it could be a less positive sign for long-term value creation. The lack of specific financial results within this particular filing means we cannot assess their current financial health from this document alone. However, it is crucial to remember that capital is the fuel for growth, and this filing tells us they are ensuring they have that fuel. Alright, that is our breakdown of this Strata Skin Sciences Incorporated filing. What is your take on companies using these types of stock offerings to fund their operations? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord community in the description for even more discussions. Thanks for watching. See you next time.